We're back on the Hampton Roads Show now to talk finances, and joining us now is Stephanie Bard from BayPort Financial to tell us about dividends and how to put them to work. Stephanie, welcome back to the Hampton Roads Show.
Thank you, Chris.
How can I get some of those dividends?
Well,
and what are they?
Yeah, I was going to say, let's talk about what a dividend is first.
Yes.
Well, a company, not all companies, but companies will pay you for basically owning shares of their company, either a stock or mutual fund. Again, not all companies pay, and and companies that do set their own policies. So, give you an example. If you own 1,000 shares of a company and they pay a 15 per share dividend, cent per dividend, and it pays 4 times a year, that's $600 a year extra you're earning just from holding that company, that stock, or that mutual fund. So it's kind of nice to add extra shares through dividend reinvestment. When the company pays you the dividend, you can do a couple of things with it. You can reinvest and buy more shares, which is nice because you end up enhancing the number of shares, which gives you more shares to get paid on. Of course, your dividend ends up getting higher. Now, the company can change their dividend payment. So if they do that, of course, you could see a difference in what you get every quarter, every month, how often they pay. Another option is to make sure, another option is to take the dividends out. If they decide they want to use the dividends as income, that can be taken out of the account and, of course, wouldn't be reinvested, so you're not adding more shares, but if you just use the dividends as income, you keep the number of shares intact. So your payment's pretty steady, however often you receive it.
It seems to me like if a company is going to pay me dividends on my stock, I'd want to put that cash in my pocket.
Well, you can, of course, but it's also, if you don't need to use the money, though, there is such a benefit to reinvesting because you will see an enhancement to your account over a long period of time.
Okay.
Of course, I've been doing this for a while, so I've seen how that works. But again, if your dividends are needed as income, there's no point in reinvesting. You might as well take it take it as income. If it's IRA, of course, it's going to be taxable. If it's a non-IRA, the dividends are taxable anyway, whether you take them in your pocket or put them back in the account. So it really depends on what works best for your situation, what you're going to do.
Now, if you're looking to get in the stock market, is it best to seek out companies that do pay dividends?
I prefer those, and a lot of investors are looking for those these days because not only will you get an enhancement on the account if the shares price should go up, we certainly hope that. That's why we invest. But also through reinvesting of the dividends, you get a couple of different ways working for you to hopefully enhance your account. But yes, I always like to look for, if possible, dividend-paying stocks or mutual funds or any type of investment that is suitable for the client.
So bottom line, it's really important to make your dividends work for you in any situation. Why is that so important?
Well, the better, the more we have them work for us, obviously the better our accounts may look in the long run. And that's what we want to do, just grow, grow, grow.
Grow, grow, grow. Not only that, but you have more advice for people over there, BayPort Financial. Right now, people are coming to you with what types of questions, Stephanie?
Well, everybody wants to know how they can get a piece of the action.
Right.
The stock market has looked pretty good over the last year. We've had a couple of bad times, of course, but it keeps us in check, I guess you could say. But I have people coming to me and saying, hey, how can I take advantage of these returns? But a lot of people also are really worried about the risks that come with the returns. So right now we're just looking at each client just differently, seeing what their tolerances are and what they have to work with. It makes a big difference, all those factors.
Best to be careful and not too aggressive in the stock market?
Depends on your risk tolerance, depends on your age, what you have to put in. I've had some folks who just want to go, go, go and get aggressive. And we look at that delicately because we don't want to go too aggressive because the market is an animal that you can't predict. So it just depends on individual factors, but I have some folks on each side of the wall.
And mutual funds are always a safe bet.
They can be. There are aggressive mutual funds out there that could take a little more risk, but they are going to be generally a little better than if you were to buy an individual stock, generally.
And no dividends come with a mutual fund?
Some do. Some pay. Matter of fact, some companies don't pay a dividend, and some companies do. Again, I like to look for companies that do, only because I like that added enhancement. Every month or every quarter looks pretty nice. Have that little dividend pop right in there.
Like the sound of it. If you have any more questions for Stephanie, you can go stop by any of the BayPort Credit Union locations across Hampton Roads or log on to bayportcu.org. Put those dividends to work for you. All right, Stephanie, thank you so much for the advice.
Thanks, Chris.